So what is the Corporate Transparency Act?
The Corporate Transparency Act is a piece of legislation passed by the United States Congress back in 2021, but it was not scheduled to take effect until January 1st of 2024, which is just recently. And the purpose of it is to ensure that certain entities like a limited liability company or corporations have information on file regarding who the owners of the companies are and where they are. There are some states like Delaware, California, where there's no need to register who the owner of the company is. So it creates some problems for the federal government if they're trying to check on whether or not a limited liability company or corporation is a legitimate corporation or just a shell company to launder money. So this is the setup to help identify those entities.
Why was the Corporate Transparency Act passed?
Essentially, it was passed for national security. The hope is and the belief is that with this, they'll be able to help target and fight financial crime, fraud, especially among the elderly, money laundering, human and drug trafficking, even weapons of mass destruction, the sale of it. A lot of times people use these entities to funnel the money through these shell companies, and because law enforcement can't find out who owns it, it makes it extremely difficult to track down the culprit, and it certainly makes it easier to use it. So the belief was, and it was passed by a fairly strong majority of Congress, that this would essentially help to fight that and help law enforcement to prevent that from happening.
When is the act going to take effect?
It's scheduled to take effect on January 1st of 2024. Now, if you think that, I wish I had known about this earlier, I would have done it, you couldn't do it. The way the statute was written is it was not to take effect until January 1st. So if you are an already existing company, so let's say you have a limited liability company that you have a couple of pieces of real estate in, you have, and it already exists, you have until December 31st of 2024 to register with the Financial Crime Enforcement Network. If this year you create a new entity, then you have 90 days to register. You have a shorter amount of time, and then next year, after that, you have 30 days to register. They gave you a little bit of a window on it. So essentially, any old company has until the end of the year. Any new company has to, within a very short time, register with FinCEN of who the beneficial owners of the company are and what the residence of the company is.
What type of entities does the Corporate Transparency Act apply to?
Corporate Transparency Act applies to limited liability companies, corporations, professional limited liability companies, limited partnerships, essentially any entity that is required to file with the Secretary of State. Okay, in New York, we have a Secretary of State. For instance, in Massachusetts, if you set up an entity, you file with the Secretary of the Commonwealth. But if you are required to register within your state or in a tribal government, then you are required to file with the Financial Crime Enforcement Network. Now, trusts are not required to file. So if you have a trust, I would say 99.9% of the time, you are not required to file. Unless the trust for some reason had to file with the Secretary of State, it does not have to. If you're a DBA, that is, you're doing business as, and you filed with the local county clerk, you do not have to file. But you have to be a little careful here, because if you're a limited liability company and your tax designation is sole proprietorship, you still have to file. So, if you're uncertain, you may want to check with an attorney with regard to whether or not you think it's appropriate or whether or not it's necessary for you to file. So if the company is, let's say, a Canadian company, a lot of Canadian companies do business here in New York, let's say it's a Mexican company or a British company, and they are doing business here. They have, I guess the easiest way to figure it is, if they have a business address here and they're working out of it, then yes, they have to file here in the United States as well with the FinCEN.
And where are the companies going to be required to register?
They're required to register electronically through a portal with the Federal Crime Enforcement Network. Pretty easy procedure. Again, as you can ask your attorney or your accountant to do it for you, you can do it yourself. But if you have any questions, I would strongly recommend that you talk to your attorney about it.
Are there any exceptions to the filing requirement?
Yes, there are a number of exceptions to the filing requirement. Large entities, large corporations, they do not have to file. If you have 200 or more employees, you do not have to file. If you're a publicly traded company, obviously you already are registered, so you do not have to file. If you are tax exempt, a not-for-profit entity, you do not have to file. If you're a bank, insurance company, if they're a dormant entity, and when I say dormant entity, I mean an entity that is not doing any business. So let's say, for instance, you have a limited liability company that used to own a piece of property. You sold a piece of property out of the LLC, and the LLC still exists, but there's nothing in it. It's basically a hollow shell. Under the statute, that's a dormant entity and it does not have to file. On the other hand, that's a situation where you may want to talk to your attorney as to whether or not it actually is dormant, what constitutes dormant, and when in doubt, those are the situations where you might want to just file anyway. So that's another question. But under the statute, a dormant entity is an exception and does not have to file. But suffice it to say, the exceptions are few and far between. If you are not a not-for-profit and you're not a large corporation, and you are an entity that's registered with the Secretary of State, chances are you do have to file.
What information is going to be disclosed when filing?
The information that they require to be disclosed is first and foremost the name of the company. If the company has a DBA, that is, they're doing business under another trade name, that also has to be disclosed. The beneficial owners, and that's an important part because there may be more than one beneficial owner. So the beneficial owner is defined as an individual who owns 25% of the company or more. Beneficial owner is described as someone who has primary control or control of the company. That is, the person that can make decisions as to what the company does, either directly or indirectly. The person who has significant financial benefit from the company. So for instance, I'm running the company, but someone else is getting the benefit, is being paid most of the money. I might be a beneficial owner, but they're also. So not only would my address have to be disclosed, but their address as well. Additionally, the date of birth of the beneficial owners, the driver's license or a passport or a government-issued ID. And I think that's the part that most people are going to have questions about. So you're going to have to take a copy of your driver's license, give them the number on the driver's license, and also submit a copy of your driver's license as well when you're filing with FinCEN.
Who is going to have access to that information?
That's a great question. So I'm hearing that from a lot of clients. Well, who's going to be able to see this information from us? Essentially, any federal government agency will have access to the information. Additionally, any local or state law enforcement agency will have access to it. Also, foreign law enforcement, so Interpol would have access to the information. And the last entity which the law says has access to it are banking or financial institutions. However, they put a caveat on that, and the caveat is provided that they have permission from the individual recording entity. So essentially, the bank or financial institution can't get that information unless the beneficial owners authorize it. My guess is that in a very short time, if an entity goes to a bank for financing, the bank's going to say, oh, we'll give you the financing provided you authorize us to look into your information. So I suspect that that'll be one of the criteria also in the very near future.
Can you elaborate on what it means to exercise substantial control?
The control implemented by the beneficial owner can be direct or indirect. So essentially, you could be the member of a board or you can be the chairman of a board, and essentially someone else is the executive director, but as the chairman of the board, you have a great deal of input, or you control the executive director, you know, how he makes his decisions, who he or she is. So in those cases, you probably are, or you may be considered a beneficial owner. That's why it's important to get advice as to whether or not certain individuals will constitute a beneficial owner. And I guess the best advice I can give you is if you have a question or if there's a doubt, probably the best thing to do is to include that person, because there are penalties if you don't follow these rules, if you willfully choose not to follow it. So if you negligently don't follow the rules, it's not as big of a problem, but if you don't follow it and you willfully ignore it, there are pretty significant civil and criminal penalties.
When are reporting entities going to be required to file by?
Well, essentially now. If you exist, if you are a acting LLC or corporation, then you are required to file now. If you already exist, you have until the end of 2024 to register. Okay? So you're given that grace period of the full year. I would recommend that you not wait until the end of the year, because I suspect toward the end it's going to get pretty busy, and I don't know, no one knows yet how the portals will function when they get a high volume of activity. So I would recommend that you do it sooner rather than later. If you're a new entity and you're just created in 2024, then you have 90 days to register. After 2025, if you create a new entity, then you'll have 30 days, and from thereafter, you will have 30 days.
Can someone file for themselves, and if so, what is the process for that?
And an individual can file themselves. Again, they have to get on the portal and register their company and provide the information that's requested. So yes, an individual can do that if they deem that they are an entity that needs to file. The thing you have to remember, though, is that if you have more than one entity, let's say, for instance, you own 3 pieces of real estate, and each of them is in a separate LLC, and they're all different LLCs. Each LLC has to register. You can't just register once and cover them all. Every LLC or every corporation or every subchapter S corporation is required to file.
And what are those penalties for failing to file going to be?
If you fail to file pursuant to the statute, and you can show that it was done negligently, that is, it was not done intentionally, but you negligently did it, you forgot, there was a problem with it, there is no civil or criminal penalty. However, if it's willful, that is, if it's intentional, the civil penalty can be as much as $500 a day with no cap, so it just keeps increasing. Criminal penalty can be as much as $10,000 and even jail time, 2-year jail time. So there are some pretty significant penalties that can be assessed for willful violations of it.